A lot of economists, supply-side economists, are extraordinarily frustrated that the Fed, which is a demand sort of driven analysis, will always pump the brakes just when things start to get good. Now, they say they're worried about inflation. That's great. But remember, inflation is too much money chasing too few goods. And when you're in an expansion caused by the supply side, which is where we think we are, you tend to see less inflation.
First, $34 billion, soon to be up to 50. Now, in an interview with CNBC, Donald Trump says he's out to hit China with tariffs on $500 billion of its exports to the U.S. That would place a huge tax on almost the entire value of Chinese exports to the U.S. Trump wants to ramp up those duties in retaliation for what he calls unfair Chinese trade practices that he blames for widening the U.S. trade deficit with China. That's the U.S. buying far more from China than it sells. The Trump administration says deficits harm the economy, even if the U.S. is enjoying some of the best sustained growth for years. China, denying U.S. claims, has hit back with its own tariffs on the most valuable American exports, including soybeans and cars. And it's done a few numbers of its own.
China is the biggest consumer market for the U.S. companies Apple and General Motors. Qualcomm Incorporated gets 58% of its revenue from sales in China. If China exports clothing worth $450 US to the U.S., the Chinese company earns 5% profit, while the U.S. side earns 84%.
These two interdependent economies have yet to resume trade negotiations, while U.S. retailers warn consumers will ultimately bear the brunt of higher prices.
Democrats are not only fighting Republicans on the economy, they're fighting their Democratic friends.
Yeah, talk about fighting the last war. I'm surprised they haven't brought out the cavalry and horse-drawn carriages and saying this is the future. Even though many of these people are young, like that congressional candidate, their thinking is ossified. They're dinosaurs. They think that socialism works. It doesn't. Hasn't worked anywhere. And they think the American economy is still stalled. The American economy is still moving. And if we don't mess up with the Fed, we don't mess up with trade, we're going to have growth rates we haven't seen in a generation. Hello?
But you think of that famous phrase, it's the economy, stupid. We got the November elections coming up just around the corner, and with 60% of Democrats thinking the economy is doing pretty well, what does that mean for the election coming up?
It means the Democrats are stupid, not the economy. And the Republicans, this is an election for the Republicans to lose by not getting turnout, by not coming up with exciting proposals.
By doing what the Republicans in the Senate are now doing, stalling on this plan to have phase 2 of the tax cuts. The House wants to push through a vote on phase 2 of tax cuts before the election, but the Democrats are stalling it, the Republicans are stalling in the Senate. Why?
Because they don't think they have the 60 votes to pass. They forget. We're framing issues right now. So the House should just go ahead, pass a juicy tax cut, and then send it over to the Senate and say, do something. And if it gets voted down, they have an issue. We try to get it. We need more Republicans to get this thing through. Frame the debate instead of being passive.
Okay.
I'm wondering when the administration is going to pull back and actually recognize that they are economically and politically constrained here by suggesting that duties will be imposed on $500 billion worth of goods is going to sink the U.S. and global economy. The problem is that the president, so far, his base has not expressed too much regret. They think he's doing a good job. Even those at Harley-Davidson, for example, which is shifting production over to Europe, where people are going to lose jobs, they say, well, we believe that Trump knows what he's doing. Right now, he hasn't really felt the call from the constituents, but he will soon.
Do you think it's an empty threat saying he's just going to tax everything?
I'm not sure. I would like to think it is, and that this is just a big game of chicken. But part of me is beginning to think that this administration thinks very differently, in the sense that they're willing to see the system crash. There's a concern that China's gaining on the United States, that other countries are gaining on the United States, and that the best way to assure that the U.S. is at the top of the hill is to set everything back. The U.S. will lose absolutely from a trade war, but in relative terms, we might end up in a better position. That's a very cynical way of looking at the world, but the Trump administration, I think, does this.
What do you think?
Prosperity does not cause inflation. Bad actions by the Federal Reserve cause inflation by creating money, undermining the value of the dollar. So it's in the hands of the Fed. And that's why I think the president was perfectly right, because when the Fed starts talking about overheating, do you feel if you get more money you're overheating? Do you feel the prosperity means you're overheating? It's the most preposterous thing in the world. The economy's not a machine, it's people. Yeah. And when people do well, what's wrong with that? They have absolute crazy thinking. The economy's not a machine. It's we people.
Well, it is the economy is very often manipulated by governments, and the president and Mick Mulvaney and the Treasury Secretary pointed out to China manipulating their currency in order to make it weaker so that they could sell more of their goods abroad. And there may be actions taken in that regard. They certainly have been devaluing their currency all week. What do you think about that?
With China, I don't want to defend China, but when China had a stable currency against the dollar, we said it was currency manipulation. When they
and that's what Mnuchin is calling it right now.
Lee, the problem with China is not currency. The problem with China is trade abuses, not letting our people in, forcing partnerships they don't want, giving away technology and things like that. Those are the problems we need to focus on. What China should be urged to do is fix the yuan against the dollar the way Hong Kong did 35 years ago. Then it's not an issue anymore. Focus on the real issues.
And Trump has been very critical of the Federal Reserve for the proposed interest rates. He's also at odds with the Treasury Department. Even when they have this report out that did not name any country as a currency manipulator, he continues to levy currency manipulation charges against China and the EU. What is the basis, in your opinion, for his allegation?
There is really no basis whatsoever. Experts will tell you that there's been no currency intervention. This has been a story we've been hearing for about 20 years, and there were times when there was intervention in currency markets, but the bottom line is it has very limited impact on the trade account. The president's signaling to the Fed to maybe slow down its rate hikes. That's not that unusual. It's a little bit more direct than previous presidents. All presidents want to see their economic expansion continue and don't want the Fed to intervene, but there's no currency manipulation issue here.
So his influence over the Fed is right in line with some previous administrations?
I think so, and I hope that remains the case.
The yuan has fallen in recent weeks, months. Is this drop trade-related in your estimation?
Partially trade-related. I mean, relative to the dollar, I mean, the U.S. economy is one of the most robust in the world right now, and so the dollar is a lot stronger, and it's attracting investment. The Chinese economy is relatively weak. It's weakening somewhat, and certainly if there's concern about a trade war coming, investment that would be parked in China is now looking for the exits. So that does put downward pressure on the RMB.
Are you the president saying what he did first off about the Federal Reserve?
Yeah, it really did, because we have a president now that's trying to influence the Federal Reserve. And here's a president now, remember, this is a guy who built his empire on construction and low interest rates.
Right, so, and I can well understand. That's the prism through which he sees life. I can definitely understand that as president of Little Dicey.
But he has to look at the bigger picture of the economy and what higher interest rates really mean. It means that we're going to have more investment in this country. So when the economy is starting to chug along, interest rates will go up. Look at the mid-90s. We had interest rates 3 to 6%. In the mid-90s, we had really good economic growth. So the president needs to take off his construction hat, his hard hat, and look at this, because currency is very complicated, Neil, and he needs to take a step back and realize that there are different things happening. Now, listen, the deficit and the debt, yes, these interest rates going up are going to balloon the interest on the debt. That's a problem. But there's, this is a skirmish in the trade war. The trade war is a bigger thing, but this is a minor skirmish. And as you said, the cost of items are going up, probably in the not too distant future.
Yeah, they're kind of joined at the hip, though, to your fine point, though. And one of the things I asked, John, is now with the president saying he's going to go full throttle again on this trade stuff, he's willing to consider just going after every good that comes from China in this country. What does that mean? Because he is arguing that we have the edge here, saying in the CNBC interview with Joe Kernan that we are playing with the bank's money. And so he feels free to do so.
I would disagree, and I think the market disagrees. I think the market, if they thought that this was going to actually stay on, I mean, once you threaten trade sanctions and the trade war, it's one thing. Once you actually start implementing them like has happened, that's completely different. And the market believes this is probably going to be taken off, but this could completely negate the tax cuts. This is self-sabotage that is completely unnecessary, and I think it could do long-term structural damage to our economy. You look at how the EU is already negotiating with our neighbors right now, Canada and Mexico, trying to get a trade pact. They've already got got one with Japan. We're promoting right now isolationism, not necessarily America first. And I think it's a mistake, this trade war, because I don't think we're going to get solved what needs to get solved, and that is dealing with the theft of intellectual property from China.
Well, do you suspect, Congressman,
ultimately the president and the administration?
Do you suspect that those tax returns would show financial deals with Russia in years past?
I don't have a clue. But what I do, well, it's not improbable given the fact that the Miss Universe contest and other things were held in Russia, and the president was deeply involved in those things during that time. So it could well be, and it's probable that there might be, but I think that, again, if you want to clear up a problem, get information out there. Transparency is the ultimate disinfectant in life, and I think that being transparent on what he has promised to do on this front would help the administration in this instance.
Because it is pretty amazing, and I was in Helsinki on Monday, that the President of the United States sided with Putin on Monday over the U.S. intelligence community on this whole notion of Russia interfering in the U.S. presidential elections. How do you explain that, even though since then he's backed away?
You don't. It is inexplicable. It is at odds with what any president has done in the past, whether that's, Nixon dealing with foreign leaders. I mean, go down the list of people that have been up and down and sideways. We've never before had this kind of response to a foreign leader, particularly an adversarial leader. And so it is inexplicable, and that's why I think it's that much more important there be an added measure of transparency that would answer the questions out there. And again, go a long way to clearing up the gray. Where there's gray and where there's confusion, people oftentimes draw the worst of conclusions. This would, again, clear that up so that you don't have that specter haunting the administration and, in fact, hurting their ability to enact policies going forward.
So, Christina, on this trade combination Fed thing, what are people telling you?
Right now, I think I want to agree with John that we shouldn't say that this is not a small deal, especially when talking about the currency comparison between China and here. Why? Because there is the largest corporate default right now in China. We could see some monetary policy happen in China, and that could further depreciate the yuan, which would create a bigger discrepancy between both currencies. We also have uncertainty in the market here.
Which would make the situation worse, right?
Exactly.
Right.
Exactly. And then you tie that in with this, and we talk about it enough, but it's happening. It's uncertainty amongst American companies right now. They don't know where to go. We're seeing that reflected in wage growth because it's climbing higher, but it's not climbing high enough. They're not. CapEx has increased this past quarter, yes, but still it's not where it should be. We're seeing productivity levels at too low of a level at this point in time. So I feel like it does have a big effect. You can say that, oh, it's a tiny part of the economy when you're talking about the goods that we're importing into the United States, but it's still affecting investor sentiment, business owner sentiment, and that's why I think it's a bigger deal than what some other people may say.